first-time home buyer, there is a lot you need to factor in when it comes to buying your house. And there's different places you can get that information and bring it together. There's the mortgage and the online calculators, and there's tons of information on all that goes into that transaction from beginning to end. There's also this new app that might just bring it together in a simpler way for you. It's called Homey, and we're going to talk to its founder and CEO, Andrew Peker, joins us today from Montreal to talk about Homey. Hello there.
Thank you so much for having me.
Homey. Okay, I get it. It's a home. It is also a reference to your best buddy. Did that name come to you in a flash of light? And were you forever grateful for that inspiration? Or do you have some terrible story about brainstorming 5,500 names before you got to that one?
All of that at once. I mean, it's not my first company. Naming companies is horrifying and painful. I was never a fan of the names of the companies that I've started in the past, and this was the
Right.
first one that did take me a while that I felt great about. And I asked people around me as well, and the response was super great and
Great name.
continues to be.
Thumbs up on the name. So, what does Homey do?
Yeah, so Homey is an app for Canadian first-time home buyers that allows them to understand, track, and grow their buying power. And what makes us different here is there is not 150 questions for them to answer. It isn't a manual calculator where they'll kind of estimate. It is just a couple questions. We actually get access to your actual financials. We backfill that information on your behalf, show you instantly what you should be able to afford if you were to go to a big five bank with a high degree of accuracy. And then we help them grow that buying power over time, and it acts as a companion, hence the name Homey.
And when you say access to financials, your app is scraping bank accounts.
I mean, well, so we're not doing it directly. We partnered with a company called Plaid. We do it via an API. It's done super securely. Their technology is I'm screen scraping at this point, and that gets into open banking and another whole other
Yes.
subject that I'm sure we
Uh-huh.
can touch on. And we also do this through a partnership with Equifax Canada. We went through months of due diligence to be able to get access to this type of data, and we handle it very carefully. And so we have all of the pertinent information that a actual mortgage underwriter would look at when they are to say, here are your trade lines, not just here's what your credit score is, but here's what makes up GDS, TDS, and all that's going to happen when you actually go to buy a home. So there are little to no surprises when the time comes.
And second part, as you said, you help people improve their ability to buy a home, either in the purchase price or maybe in how aggressive they can get on rate because their credit score is amazing. How do you go about doing that?
Sure. I mean, so credit, part of what we're doing that's super important to me and our mission is that it's so much more than credit score, right? And it's so much more than one input. It's many, right, that make up what is buying power. Part of what we do is just being there, right? So, it is, I don't want to act like there's a magic wand, right? A lot of it is awareness through your daily and weekly spending and saving. So, and as it relates to their home buying power. So making sure we make people aware of their everyday habits that make up what makes up their buying power as they approach that day.
Mm.
There are other more creative things that we do. For example, we'll see, and anecdotal, hey, Toyota Finance Canada checked your credit. If you're looking to buy or at least a new car, this could have a really outsized negative impact if you're looking to buy a home. Other examples, yesterday we had a notification that went out as the Bank of Canada changed their overnight rate and how it affected people's buying power. Part of what we're doing is also saying it actually doesn't affect it very much, just to make people aware of that, right? And so I think we do a lot of, there's all these sayings about if you have the right habits, it really compounds and gets you to a place of whether it's personal health and financial health. So in this case, your health when it comes to buying your first home.
Mm. I referenced off the top how hard it can be to get a true snapshot of what it's going to take to buy the house. There's the legal fees and commissions and land transfer taxes and whether you're buying or selling. There's just a lot of info. How does Homey bring that together? So the first time home buyers, like they've got a line item for moving, for
Yeah.
example.
Yeah. So what we have today, and I'll say this, today is the worst version of Homey that you'll ever see, right? So our goal over time is that everything you can imagine will be built in. Right now, we really focused on what the really key line items are, including like, hey, when an underwriter looks at how much you can afford, they need to know that you have 2 months of cash reserves for those mortgage payments, right? So that's something that factors into your buying power, not after the fact. We actually minus that from your buying power and say, hey, make sure you're going to have this set aside. We also have line item for things like welcome tax here in Quebec that you have to set aside as well. But in the future, we're going to be rolling out tons of features that factor everything from moving to insurance. And the key here is accuracy. I should say, will not put a forecast out there that we can't stand behind, right? So that's like a major differentiator here. I don't want to estimate. If I can reliably tell you, and that means having reliable inputs to be able to tell you here's how much your insurance will be, or here's how much your move is going to be. I don't want to really give people a false expectation. So those features we're rolling out in the future.
With any fintech, there is the consumer need that they are hoping to address with the necessity of some sort of a business model. And
Yeah.
often those can be maybe not operating in opposites or conflicting, but
Yeah.
sometimes it's a bit of a stretch. What's your business model? How do you make money? And what are the things that are like a perfect fit with what you're trying to do? And what's less of a perfect fit? And I think the example I'd give is like those rate sites. They make money through affiliate links. And at the same time, they want to be as objective as possible on providing rates. Those two things are against each other sometimes.
Yeah. Yeah. No, great question. So I'm somewhere between being an insider at this point and an outsider in the industry. So I've spent about 4 or 5 years in the space, call it mortgages and fintech here in Canada. So I know enough to be indoctrinated, but I'm still enough of a consumer tech guy, and someone, who started my career as someone that was inspired by things like, the first iPod and really doing consumer centric things to try to find a business model that threads the needle between solving the consumer pain point and the business need while keeping those incentives aligned in a healthy place. And what we came up with, this business model, I feel really strikes that balance. So free for consumers, completely free for consumers. We partner with mortgage originators across Canada who have tons of these customers coming through their pipelines that they cannot help. And usually the way that they function is they basically put people on an email newsletter that doesn't work for the consumer, doesn't work for them, and we're an alternative to that newsletter. So instead of sending them kind of useless drip emails, they send them to Homey. We nurture those customers over time towards being mortgage ready. Once they are, we work to refer them back to that original mortgage originator. And if they buy a home, that originator pays us a commission. It doesn't come
And
out of the consumer's pocket.
they pay a commission like a commission they would earn from if you're going to a mortgage broker, for example.
Yes, exactly, exactly. Which, just like a mortgage broker, it does not come out of what the consumer, like it is free for the consumer. There is no cost to them, and it doesn't raise what the consumer would pay as far as interest rates or anything like that. It's
Let's
truly,
let's
I think,
let's let's
prosumer.
say no cost to them directly.
No
Let's
cost to
let's
them.
say no cost to them
Sure.
directly. Consumers always pay it. It's how they're paying
And
and
it's
their level of awareness about what they're paying. There is a real challenge for Canadian consumers. We will drive across town to get a great deal on a bottle of laundry detergent, and we will barely invest 30 minutes in ensuring that we're getting a competitive rate and a competitive set of features when it comes to our mortgage because so many people just renew like lemmings at the bank or whatever their
yeah.
prior originator was. What do you do? What does Homey do to support consumers in making an informed choice and ensuring that they get the best combination of rates and benefits possible to them?
So I'll be honest, we haven't invested a great deal in what is the rate experience at this point, right? So it's fairly basic in the sense that they see the best rates available from the mortgage originator that referred them.
So
And
they stay with that originator. That tie is bound.
that tie is bound. Consumers can come to Homey directly, through the App Store or through our website. It's open to everyone at the same time, and that experience is slightly different. So right now we're just showing one best rate available, both fixed and variable. Over time, there's definitely a possibility we can evolve into a more open marketplace where that integrity that you're speaking to will be super key to
Mm.
us. Having integrity of our, our offering, right? Like we truly want to be unbiased and give people the best possible advice they can get. But that's not the platform we are today. We're focusing more on getting your own ducks in a row. As you know, interest rate matters, right? But if you're 18 months away from buying, it actually matters a lot more on what you do on the month, day to day, week to week, month to month, and gearing up for that
Yeah.
than what the interest rate may be.
How long, and you haven't been around for 30 years. So based on current data, how long does it take for your average user to be ready to buy a home?
Yeah, so hey, we're in the weeks since we launched, right? So and this is experience based on companies I've worked at in the industry. So I can't give you a homey estimate. From what I've seen, it's pretty fair to see a first purchase for a new home taking folks, 18 plus months to be ready to buy. So from that initial, you can call it exploratory phase of looking at rates, looking at homes. Um, that's about your 18 months out as a kind of fair number.
Um, for mortgage originators, they would just put this in their marketing budget. They would say, listen, there's a higher probability I'm going to get that client to come to me afterwards. So I'm going to price this versus, an ad on a bus.
Well, so it's actually more so think of it as for them they don't pay up front, right? So it's purely on performance. So for them it's they look at it as this is revenue already lost, right? So this lead is already right now they look at it as, part of the breakage and what's increasing their cost of acquisition versus what we have is something that could possibly save it, right? So when we talk to folks across the industry, the main person that we're talking to, our champion internally, is the person that's running marketing. And we're
Right.
saying, hey, your cost of acquisition is extremely high. Conservatively, it's $1,000 per mortgage. It's probably looking more like 4K these days. And so for us to offer them incremental conversions at zero upfront cost is super intriguing to them. And we're seeing a great response as a result of that.
I've been in the financial literacy slash financial behavior space for a very, very long time. I've written books about it. I have this show about it. And I realize the limited utility in knowledge. Limited utility in knowledge and the enormous and transformative benefits of insight. As you look at the interventions that Homies developed, can you give me an example of one that will prompt insight if you believe, as I do, that it is insight that drives sustained behavior change?
It's interesting. I mean, just so I understand, the difference between insight and information is it's a nuance that almost no one else would know, is my understanding of
It's
that.
the moment the light bulb goes off. So
Mm,
every single person can Google how to get a mortgage, how to save for a mortgage, what you need to do to tweak your budget, don't spend so much on Christmas, like all those sorts of things. The
right.
insight is, wow, I am making a really dumb decision for future me. And if I manage my behavior in the present, I am going to be able to afford what I want in the future. So I'm going to make some decisions about my behavior in the now in service of the future.
Yeah, I mean, I hate to repeat, but this is one of those things that I would spend a ton of time actually sitting with underwriters in a past life and them communicating with me, hey, here's some of the biggest mistakes people made that absolutely killed their ability to get a mortgage. And the one that would come up a lot was leasing a car,
Yeah.
right? Car loans. And I know I said it before, but I can't emphasize it enough. It really is a bit of like, I had no idea that that was going to do this to my
Right.
ability to buy a home. There's a light bulb moment that happens. And it's just like the way people think about, oh, I'm paying $400 a month for a car. I don't understand why it's actually, looked at completely differently from an underwriting perspective. So that's a really light bulb moment
Yeah.
that we try and service
Yeah.
to folks.
That's a great example. It's a great example. Andrew, thanks very much for your time today and best of luck with your launch.
Likewise, thank you so much for having me.
Andrew Peker is the founder and CEO of Homey. It is an app in the financial services space, in the fintech space. And one of the things it's trying to do is increase the ability for its users to be successful in buying their first home.